Hello, friends. Welcome once again to the Cantor's Corner. This week we read in Parasha Behar Bechukotai on how we are to ethically treat each other, especially in the realm of business dealings. We read in the Parsha, if your kinfolk being in straits comes under your authority, and you hold them as though a resident alien, let them live by your side. Do not extract from them advance or accrued interest, but fear be in awe of your God. Let them live by your side as your kinfolk. Do not lend them your money at advanced interest, or give them your food at accrued interest. Now, generally speaking in this country, I think we're pretty good about that in the banking industry. But I do believe there is one group, one industry that is not good about that at all. And that is the payday loan industry. Now, what exactly is a payday loan? A payday loan is a short-term, small loan, so average is about $300 or so for that loan, and they're designed to be paid off in a 2-week time period, where if you're paid bi-monthly, paid twice a month, that means you're paid every 2 weeks, so the next payday you are to pay off the loan. In order to qualify for a payday loan, you have to have a bank account, so that also limits things a little bit because there's still plenty of people who don't have access to bank accounts because of their position. Now, with most loans, bank loans, the interest rate is at a pretty low rate, 6, 5, 8% sometimes. Or if you're dealing with credit card interest, which is definitely on the comparative higher end, we're talking about 12, 11, 18% or so. With payday loans, if you were to look at an annual interest rate, that would be closer to 700, 900% interest over the course of a year. But I hear you saying, whoa, hold on, these are loans that are supposed to be paid off in the course of 2 weeks. Why are we thinking about an annual interest rate if you're not going to be anywhere close to annual? Well, that implies that a payday loan is going to be paid off in a 2-week period. We can think of those kinds of high interest rates as justified for things like a car or a movie if you're renting them. But it's justifiable because at the end of a week or two, you give back the car, you give back the movie, and you're done. There's nothing else there. That's not exactly the case with a payday loan. Payday loan industries are quite literally banking on the fact that many people are unable to pay off their loans in the time period that is allotted. And so you have a rollover where more fees are tacked on and the interest rate that is sky high begins to really take effect. And so if they can't pay it off that first time period, it's going to be even harder in subsequent periods. And oftentimes, people take out yet another loan in order to pay off the first. And it begins a never-ending cycle of debt. Now you're probably wondering, why are these businesses still around if they're behaving in such a predatory fashion? Well, I see 2 reasons. One is that when regulations are made, they're able to easily slip under and find new ways to go around them because it's been done on a state-by-state level. For example, in the state here of Ohio, a regulation was passed in which short-term loan companies had to register as such with the state. And if they were registered with the state as a short-term loan company, then they were subject to regulations which limited their interest rates to far lower than the 700, 900% that I mentioned earlier, rather in the range of 28, 36%. Still high, but not nearly as high as before. What started happening here? Well, the number of short-term loan companies dropped off precipitously. However, instead there was a rise in short-term mortgage companies that were giving out mortgages in the realm of about $300 or so to be paid off within 2 weeks. Sound familiar? So that's one issue. Another one is that when regulations have come up as well, not only have they been able to dodge them, but because of their considerable war chests from their bounties, they've been able to do quite a bit of lobbying against the provisions, which causes another issue. Not only that, as part of their lobbying, these short-term loan companies are saying, yeah, we have to charge these rates in order to keep our business afloat, and we are necessary business because there is necessary demand. And there is some truth in that, because there is quite a bit of demand for these comparatively smaller short-term loans for people that are in a state of poverty. When people don't have any savings, which is about half the US population, any sort of financial shock hits them really hard. A car repair, a medical expense. These people need a small loan simply to get them by. So in a sense, these short-term loan companies are filling a gap made by the banking industry, because the banking industry wants nothing to do with these tiny loans, because according to the banks, they're not going to make any money off of them. So the question is, where do we go from here? How can we remedy the situation? I see two possibilities. One is to bring back in the US the practice of postal banking. The post office was the first real large US institution. You have them all across the US, and yes, there are some towns that are so small that they don't have a post office anymore, one of them being Hell, Michigan, so unfortunately you can no longer postmark things to Hell. But still, they're prominent enough that were post offices able to provide basic services like small loans, or especially banking for people who do not have access to banking, who have to deal with instead a different kind of predatory behavior of check cashing industries, that would alleviate this situation tremendously and fulfill a need where there is one. Or, like what Finland is doing, they're doing something quite radical, which is a universal basic income, where each person, if they register, is guaranteed to have a certain allotment from the state, the realm of about $500 US or so, I think, per month, that they don't have to claim, so that it's not deducted from other federal benefits that they get, so that if they do get employment, they can still hold on to this universal income. Not only has it helped out in these exact same situations where a person is in sudden financial shock that needs to be alleviated, but according to some studies out there, it has in fact reduced mental health issues in Finland. So there is promise for these. So I ask for you to advocate to your state and your local representative, state representative, and if you wish, federal representative. Let them know about these predatory practices. Voice your displeasure to them. Tell them that there are people that are in real need, that this current industry of short-term lending, of payday loans, is doing, but they're preying upon unsuspecting people. Let your voice be heard. And if all of our voices are heard together, then I believe we can make a difference.